All right, folks, back to work. Hope you had a fantastic day out there. It sounds like a lot of you guys made some money today, so well done on that. Now, more good news for tomorrow. Boy, charts are setting up with a very easy chart pattern on both the S&P and Nasdaq right now. So the game plan is pretty easy for tomorrow. I have a handful of trades I'm tracking for Thursday morning. We'll cover the entries. We'll cover the exits. By the time we're done tonight, you'll have an easy roadmap to make some money tomorrow morning as well. So charts ready to go. Enough of the intro. Let's go make some more moolah on what should be a very good day tomorrow in the markets. Boy, S&P and Nasdaq are all ready to go. S&P SPY is ready to go here. Nasdaq triple Q's here. I have three very important clues on the charts right now that are telling us where I think the winning trades are waiting for tomorrow. One of those big clues is right here on these 60-minute, these hourly charts. You'll notice we're bullish overall on the S&P SPY, bullish overall on the Nasdaq, the triple Qs. I like to use these hourly charts for an overall directional bias, directional filter. We know what the overall momentum direction is. But these are not going to go the whole way. These are great for overall direction, but they're not going to give us the right entry tactics, the right levels of support and resistance for tomorrow. I have two even more important clues on some faster time frames, some tick charts that will help us time better entries. We'll cover that here in just a moment. Before we do that, though, let's check schedule for tomorrow because there are two things on my mind for tomorrow. You want to be aware of these as well. First things first is the jobless claims and the PPI block of news coming out at 8:30 Eastern Time. PPI is usually pretty important, but we saw the CPI come out this morning right in line with expectations, so it may not be as big of a market catalyst as it usually is tomorrow at 8:30. But nonetheless, though, that's on my radar for tomorrow. The big news for tomorrow, though, is tomorrow afternoon. We have Jay Powell speaking at a roundtable discussion. That's definitely something we're tracking for tomorrow. So 8:30 Eastern Time, PPI and jobless claims. And as always, when Jerome Powell speaks in the afternoon, be careful late in the morning. Markets do funny things as things dry up into lunch. But let's get back to our charts, though, because it's good to know when the news is tomorrow, but we all know the money is made on the charts. We mentioned earlier, I have two more important clues here. The overall direction is always kind of the easy part, right, on the hourly charts. Let's drill down to some tick charts here, put a game plan together. I think tick charts make entry timing easier because they make the patterns easier to see. And by the way, this is a 7,000 tick chart. All the time frames are there for you in the upper left-hand corner. And if you're watching for the first time right now, welcome to my channel. That is the 21 EMA. It's pretty much the only indicator I need to find lots of winning trades each week. There are two more, I think, more important clues here on this tick chart right now. One big clue is that range right in the middle. Now, why are ranges important? Well, because ranges, they like to rotate. They go down, up, back and forth they go, right? Ranges are magnets. Ranges love to rotate. That's one very big clue on the tick charts. And those two here connect off these highs, bring it down around those lows. It does seem like we've got a bit of a channel rotating back and forth, right, as we go as well. So those are three clues I'm seeing right now. Overall bullish on the 60, got that beautiful range right in the middle and that bull channel rotating higher. Put those clues together, I see three easy trades here on the S&P and SPY. I have a couple more bonus trades also I will cover on the Nasdaq a bit later on in this video. So if you like making money, if you're a serious trader and a gambler, you'll want to stick around all the way to the end. One of my favorite trades, though, for tomorrow is definitely going to be a bear trap down in this area. I would love to get down around some key areas of support below the range, below that channel. Now, you know me, right? I don't have a crystal ball. I can't pick the bottom. I can't predict how far that pullback will go. What I'll do is I'll look for what is ultimately a bear trap pattern. I'll wait for the bears to try once. Let those bears try twice. Once those bears try twice, because again, this is a horrible spot to be selling, right? I would never want to sell right there, right? It's a rookie spot to sell. Let those bears get caught short. Then I know where their stops are, and I can use their stops to fuel that move going higher. Now, where does the market want to go at that point? At that point, the market wants to rotate all the way back to the other side of the range, other side of that channel. This is a great way to add to your winners. If you want to make more money, add to your winning trades And to do that, I like to use what's basically a technical trap pattern. In this case, it'd be a bear trap pattern. There are 3 components to a bear trap add-on entry I'll use for tomorrow. The first component is some separation away from the moving average. Separation equals strength. The next one is that higher high in price. That tells me now I can buy right below that low. There was one right over here. So I mentioned earlier 3 trades I'm watching for tomorrow. One of those 3 trades is a bear trap. It's a failure pattern that we saw right here. Failure pattern. If you watch last night's video, I know a lot of you guys made money on that today, so well done on that. So failure pattern first, and then as it rolls higher, as it rotates higher, it's a technical trap pattern. A technical trap pattern. We go up, shallow pullback, higher high in price, right below that low. Get a bunch of emails from you guys loving these setups we talked about in last night's video. So one of the 3 patterns, bear trap, failure, trap pattern combination. Now, a second trade here, we are in overall bull market right now. And so if we do end up running higher here, one of the most consistent things I know about ranges is that when they break out, they love to break out pullback. Now, there's actually 2 types of entries I use on a breakout pullback. One, let's get rid of that channel here for a moment. One is that same type of trap pattern. So as we get that breakout, think about getting separation off the moving average, a higher high in price that sets up for a trap pattern, a technical bear trap pattern. If you've taken my free video classes, you know the difference between a failure pattern and a trap pattern. So a technical trap pattern going higher. And then once we get, ranges, they love to make these measured moves after a breakout, right? The size of the breakout leg, that creates that target up there. So I'll use that for a target, but then I don't want to buy high anymore. What I'll do is look for a breakout pullback. Now, breakout pullbacks are very consistent. They love to use a 2-legged pullback. Now, think about a measured move. My favorite type of 2-legged pullback is a measured move that goes a bit too far. It'll overshoot that measured move by a little bit. But think about a measured move there. Now, again, I'm not going to pick a bottom on this. This may wind up rolling all the way back down again. And I will talk about how to short that sucker here in a moment. First, though, here, what I look to do, though, is look for that same combination I mentioned earlier. Trap those bears in a failure pattern, squeeze those stops, and then as they run higher, think about that trap add-on, that trap combination. It'll be just like this one over here, right? It'll be a higher high in price, get that separation off the moving average, and then of course you got that bear trap going there. Now again, these can be used as 1 leg, 2 leg, right? Think about a measured move there as we go higher here. So I promised 3 trades here on the S&P. Trade number 2 is a breakout pullback. And breakout pullbacks, you can break them into 2 separate entries on the way higher. If this starts to really race going higher, it's basically a trap pattern with that higher high in price, that trap below the low. A lot of examples of those, right, inside the free video classes. And the most important thing is once we get that measured move up here, I do not want to buy right into those all-time highs up there. I want to buy low. To do that, look for that 2-legged pullback. And my favorites go a little bit more than that 2-legged pullback, then failure pattern into a trap combination. Target comes off course, back up to retest the high, and leave that runner. Now, I have one short trade going back down into that trading range. Before we talk about picking the top on this, though, let's slow down for a second because we've got a lot of patterns so far. I know most of you guys watching right now, you know these patterns. You're making money with traps, failures, why we love ranges and range rotation. But listen, if you're watching for the first time right now, this might be a brand new language. What the heck is this guy talking about? Don't you worry. I teach the entire roadmap. I have a ton of examples of traps and failures and range breakouts. I cover this in so much more detail in our free video classes. I'll put a link up top here for you. Don't you worry. Upper right-hand corner, grab that link that popped up there. Take that free trading course because the strategy I teach in that video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each morning. More importantly though, I want to teach you my 4 favorite entry patterns, help you time better entries, start making more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free video course. Everyone loves all the trade examples I include in that free video course. It is perfect for anyone who's serious about making money in these markets. And also keep in mind too, guys, I'm going to put all the important links we talk about tonight, the description of the YouTube video. I'll put the free class links down there. Definitely start there first. Learn the roadmap, start making money on your own. And don't forget, we trade together every day in our trade room, 8 o'clock Eastern time. You will love the trade room. I'll put trade room membership information down there for you. And keep in mind, I post a lot of charts, updates, videos, mindset stuff on Twitter X throughout the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully earn a bunch more are linked up there for you in the video description. So where did we leave off? We talked about trade number 1 was a simple bear trap for tomorrow, a failure pattern, right? Failure pattern back up again. Trade number 2, right, was that breakout pullback. And again, a couple different ways you could trade that one. But what if we fail off that high, right? We're way, way high up right now on the 60. I could easily see this thing running back up and dumping right off that high here. So could I short this thing up here? Could I short this back down into that trading range? I have 2 favorite patterns going against the overall trend to short this thing. Let's cover one of them right now, and I'll cover a second short trade pattern on the Nasdaq in a moment. If we go higher here, what's my big problem? Momentum. Momentum is the big problem. So trying to pick a top up here is always very difficult, right? You can have a great setup, the best indicators, the best signal, but it's just never going to be as reliable. The most reliable trade I know to trade a reversal, my favorite reversal trade is a V-top. Now, V-tops are very simple. If I see this thing run up and get whacked back down again, I'm going to wait for that momentum now to turn over and push lower and begin to grind going lower. Now, again, this one requires a bit of patience, and the reason why we wait for these types of setups is because we're so bullish overall. Again, I'm not going to try to pick the top on this. I will give you a more aggressive entry on this a bit later on in this video, but again, picking tops and bottoms, easy way to lose money consistently and waste your own time. So what I'll do is I'm going to wait for that momentum turnover. Then once I start seeing this thing grind down like that, momentum now shifts now for the sellers. We know this is a range. It wants to rotate. So now what I do is I find a channel by connecting off those lows. I pin that channel up around that high. That creates that bear channel. Now, repeat after me. Look left, find a prior swing, and I want to short the first test off the high of that channel. Now, this in all reality could be any of the entry patterns you guys are learning inside the free video course. This I'm showing you right now is basically a bull trap, right? It's above a prior swing, a series of lower lows. The most important thing though is I want to get the first short signal off the high of that channel. It could be a bull trap like I'm showing you here. Oftentimes we get below the 21 EMA. Buyers start trying to look up here, right? Buyers will try to buy into it. They'll fail back down again. Buyers will buy into it. They'll fail back down again. And again, where's the market want to go? It wants to rotate. It wants to rotate back and forth, right? Inside of that trading range. So we know where targets are. Take some off at that low, right? Taking some off at that low. And once we find our way down here, what do we do down here? We take our profit in the short side trade and we trap the bears in. 1, 2, and we do it all over again, right? That bear trap off of that low. That's 3, my favorite trades here for tomorrow. One final thought on this is, whenever I go against that overall trend, for me personally, these are half size positions. I'm not going to use my full size contracts, full size entry on trades like that, right? So half size, quarter size, a third size. If you're not making money consistently going with the overall trend, It might be zero size for you, right? Make your money consistently first. Then we think about calling tops in a bull market overall. Now, I have a couple variations of this. I get some bear trap variations, some reversal variations. Let's talk about some bonus trades, some variation trades here on the NASDAQ, because those are my favorite. We may not get those picture perfect trades here for tomorrow, so let's cover that here. Now, before we talk about NASDAQ here, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies. Guys, that makes a huge impact on my channel because YouTube, they reward me every time you like, share, and subscribe to my channel. I get it. I know we're all busy people these days, and I appreciate you guys spending a few minutes with me every evening on these videos. So thank you so much for the likes, subscribes, and all of the ongoing support. Now, let's talk NASDAQ and get some more winning trades setting up for us here tomorrow. You don't need me to tell you we're bullish overall, right? We definitely see that on the NASDAQ right now. Over to our tick charts here, 4,000 tick chart, upper left-hand corner, same 21 EMA is that yellow line, same two clues. There's my trading range. Ranges love to rotate back and forth. You'll notice how I mark up the amount above, the amount below, right? That gives me some key levels of support down there. Also clue here, that channel off the highs, channel off the lows. Why is that important? Well, because of rotation, right? They love to rotate. So I mentioned earlier that one of my favorite trades for tomorrow was basically a bear trap down here, right? Trap the bears in once, twice, squeeze those stops. Again, if you watched last night's video, you're ready for these pretty easily for today. Same thing, right? Running lower, bears once, bears twice, squeeze those stops and run higher. Now, I love that trade, but we may not get that. We simply may not get that two-try failure pattern like I teach in the free video classes. A lot of times what happens is we wind up running lower here. There's so many buyers down there, it just whoop and runs right back up into that range. These can be really frustrating unless you have a good game plan for it. Here's what I always do. If it V-bottoms off that low, I'll be watching to see if it starts grinding higher. Okay, this grinding motion is a dead giveaway. I'm going to mark off that high, bring it down around that low, and as always, repeat after me, look left, find prior swings. I want to get that first test is the best test off of that, in this case, a bull channel low. The hardest part about these setups is that little voice in your head is going to be screaming at you to chase this thing. You do not want to chase. Professional traders, we buy low, we don't buy high. We don't want to chase it as it goes higher. But I'm telling you right now, if you're anything like me, that voice in your head will say, come on, dummy, get in, you're missing it. Your patience will pay off. Most of the time, these will pull back right around those lows and you'll get paid on that bear trap off of that low, that V bottom reversal. Now, we have JPOW. We get JPOW tomorrow afternoon, right? So wouldn't be totally surprised if we saw a relatively big move going lower here. We have a beautiful range down there. Beautiful breakout pullback zone down around that 2093 area. There's similar stuff on the S&P as well. The point I want to make though is that oftentimes we'll get a run going lower. It'll be a relatively strong run lower. We'll get that bears once, bears twice. We'll get that bear trap, which is technically a failure pattern, the way I call it in our trade room, a failure pattern. But oftentimes what happens is because that move down is so strong, it'll hold this last prior low like that as resistance, and it'll make a run back down to retest the low. Now, this is a winning trade, of course. I always go for a 1-to-1 first target. My stop moves up to my point of entry. It's a winning trade. It isn't a losing trade, but it's not going to give us, right, that big run we all want to get off of that low. In these situations, these can be a bit scary because that move down, it feels like a reversal. Guys, it's not a reversal. We are so high up right now on that hourly chart I mentioned earlier. This is a gift to the buyers. Another leg lower is a gift to these buyers. Now, my favorite trade here is once they take out that low, sometimes this winds up becoming a measured move. I mentioned earlier that the breakout leg of a range, right? The range breakout leg is a measuring leg. So somewhere between that low of day right there, that low, and again, and the measured move, we'll know more about that tomorrow. So somewhere right around there, this is where I want to look to do it again, okay? Because obviously this is a horrible spot to be selling. Right? I don't want to sell right there. If you want to sell high. Don't sell low. But you know what? When I was a rookie, I knew what to do, but I didn't do it. I got roped into these bad trades all the time when I was a rookie because my emotions were firing off. I was chasing things. I had too much going on, too many indicators. I think we all been there before, right? So we know why rookie traders get chasing after these things and make mistakes down there. I'm going to capitalize on that, right? Their mistake becomes our profit. So now again, trap those bears in because again, I'm not going to pick a bottom, right? Stop with all that nonsense picking tops and bottoms. Maybe you get lucky once in a while picking tops and bottoms. Very difficult to be lucky every day consistently, right? So once those bears try twice, trap those sellers in. Remember, think about this. If you are caught short and you get stopped out, what happens? You buy your way out. That's why failure patterns work so well in our trade room. Now, where does the market want to go at that point? The market wants to go back up and take out that high right there. Before we get there, this is your chance now to add to your winners. Want to make more money? Add to your winning trades with those trap patterns. It's a failure into trap combination, a 2-try failure pattern into a technical bear trap pattern. Again, this will make a lot more sense once you guys are going through our free video classes. These are double bottom retests. If you watch last night's video, we talked all about this, right? Strong move down, go back and retest that low. Horrible spot to be a seller. 1, 2. That was pretty easy today, right? Pretty easy. Didn't get the exact double bottom, but we don't need exact, right? Just something close to that. Trap those bears in, squeeze those stops. It's the exact same thing we talked about in last night's video. And that's how trading goes, guys. Trading is repetition. Trust me, once you learn what works, you will keep hitting that button over and over again. You won't need variety in your trading. Now, earlier on in the video, I talked about going higher, right? Going higher for that 2-legged pullback. I still think that's a great trade here on the Nasdaq. I still think that run up, that V top, and grinding down. Look over here what happened right here, right? Goes up, V tops, grinds down, trend line, right? Trap above that high. That's what happened right there. That's all that happened right there. It's that same V-top pattern I keep talking about. So we go up, we V-top, we grind back down again, we mark off that low, mark off that high. Okay, that is probably the most reliable way to trade short in a bullish overall market because in this pattern, we're now turning that momentum over. All right, you're not trying to pick a top. Picking tops are tough because again, we're so bullish overall, okay? Now, one more pattern to sell off the high. Not my favorite in this situation, but we'll see what we get for tomorrow. If we run up here right now we look and see, do buyers show signs of exhaustion? Now remember, if we get a strong run up, that begins to separate off that moving average, higher high in price, right? That is what tells us it's a trap pattern. Right? If we start pushing higher here, we get that separation, there's a trap pattern. But if we pull back and the buyers can't push it higher, we go lower again. The buyers try another time to push it higher. If I see a lower low in price and move just above that high, keep an eye out for a strong red candle now for the short here, closing below that moving average. Now this one takes a lot more guts because this one, you don't have that benefit of that momentum rolling over. Again, as always, half size position, quarter size, third size position. Against trend, it's not going to be that full size position I would use right on a bear trap below that low. I'll go full size at support below the range, half size, quarter size, third size, right? So please size accordingly depending on with or against the overall trend. I call these crown reversal patterns. They're basically bull trap patterns, right? We run up, The buyers run out of gas. They try once. They go lower. Always, 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 always could be a lower low. Why lower low? Because buyers want to buy low. I need to get those buyers committed. That way, when I get that strong red candle, all of those buyers are going to see that. They're going to flatten their positions, sell their way out. I want to have a bunch of buyers in that trade. Then once I get that nice juicy red candle closing below, it scares them all. It runs their stops. If you're caught buying up here, you're selling your way out. That's what makes that pattern work so well. All right, guys, those are 3 variations of my favorite trades. These are all pretty good trades for tomorrow. That's the game plan, though, for tomorrow, Thursday morning. Now, speaking of tomorrow, don't forget, guys, come trade this stuff with us. The easiest way to start making money in these markets is to learn and trade along every morning in our trade room. As always, guys, I'll put all the important links. Want to learn more? I'll put all the important links in the description of this YouTube video. Start first on the free video classes. Everyone loves the free video course. Learn the roadmap. Start making money on your own. And again, I'll put all the important details for the trade room, the Twitter feed. Any trouble getting access to our video classes, use live chat, call the office, and I'll be here to help out every step of the process. All right, guys? Been a fantastic week so far. We got more winning trades to find tomorrow. Hope you learned a bunch in tonight's video. Hope you use this knowledge to earn a bunch tomorrow morning. And hopefully I'll see you sometime soon and trade with me, 8 o'clock Eastern time, as a member of the SOT Trading. Guys, in the meantime, be well. Be nice to each other out there, will ya? And be here next time. Adios, amigos. Bye for now.